Hi all, this is a review of my Euro Swiss franc buy trade I did yesterday in the New York session, and so this I think was a very important trade for me in terms of at least trader development wise, because I got some good insights on trade management and how that should be handled, multiple ways in which that could be handled, and how I should handle trade management, what sort of approach I should take. So it just confirmed some of the lessons I had from my trades yesterday as well. That is the day before this trade. So I'll firstly cover the trade, and then I'll cover what I was thinking about and what I realized in this topic of trade management. So firstly, my bias on this was long. Why? It's because I'm in a bigger upflow. First of all, I'm at a support area over here. This is a very key support area at which prices are holding. So the buys are kicking in from here, and all of this mess was happening near a support area. And after this move down and this spike move up, it looked like the buyers were back in control. But the sells actually hit it from here and pushed it down. And this is when I started to get really interested, because these sells pushed it down. Sure, they look strong, but what did they achieve? I always ask myself, what did the swings achieve? Because I think the true test of strength is based on what a move achieved, not how it looks. So this move did not quite break this low. It just halted, and it even went up, tested this resistance area, and came back down very sharply. So I went down one time frame lower to see the details of this, and here I saw that okay, after this move down, the price went up and got some spike sell liquidity over here, but the sellers from over there could not even break this low over here. They just made a higher low, and after price went up and came back down, and price was just holding at this area near the buys again. This is when I got very interested to take a buy up to at least this top of this area over here, with the reasoning that if the sellers are to break these lows, since they failed to break the lows from this area over here, because they could not make the lower low, since they failed from over here, the logic was that the sellers need a better price in order to get fresh sellers in and create the lows. So that was the logic, and so my target was based conservatively on that logic, right over here. It was not over here because I did not want to give chances for fakers to fake outs or spikes I did not want to include fake outs or spikes in this logic, even though I think I could have. But this is just a relatively more conservative approach, which I think was fine and very logical, and there were good reasons for doing that, which I'll cover in another video. Now, in terms of the actual specific buy entry, the buy is just held on around here, and here I went down to one time frame lower, and in here I saw buyers coming up over here, and a very choppy move down by the sellers, respecting this support. And after the sell move came down and a small rollover sort of happened over here, this is when I got in. Price went down and came back up, and soon after my entry. And now my stop loss was based on the overall thesis. The main thesis for this trade was the price sellers from over here could not break the low, therefore I must get therefore I am protected if I place my stops below this low, because the whole idea of the buy is from the fact that they could not break the low. So that's where I kept my stops. Now, during the actual trade, I did remind myself that how I want to play the trade management game in this trade is I want to keep my stops based on the original thesis, and I do not want to play the get in and get out game, trying to capture the breakout move. Reason being, it's good for me, it's better for me commissions and spread wise, it's better for me in terms of lowering the re-entry risk, and it's better for me because my read has been quite good lately and prices have gone in the direction I anticipated it to go, so I can afford to give it some pullbacks since I'm confident in my read. So after price just fooled around and went and made this really strong breakout up, this is when I moved my stops to this blue line over here. Now I had identified before that this particular zone right around here was a potential reaction zone where the sellers could try from again. So I identified that, but I still had a bit of faith in my bigger time frame logic, which was based on sellers need a better price than this to make the lows. So that's why I did not have a take profit order up there. And when price spiked up like that and came back down, I thought maybe have I screwed this up as it was coming back down. And what I read, and at this point is when I had a big think about the whole situation and how I should play these kind of things. So firstly, I did not take partial profit, because during this time after this move, and it was just these candles over here, during that time my view was still bullish, and I did not think it's going to come down all the way. So I didn't see any logical reason to take partial profits there. So again, I'm trying to respect my overall and bigger read on this, which I think is a key theme in this trade, to respect the overall read on the reads are generally good, and play them out. So once price came down over here, that's when I started to realize, hey, this may actually just be continued accumulation, because if I just go up one time frame, this is still within that accumulation sort of range. So my thesis has not been broken yet, and if I'm looking at it from this perspective, this is just normal buyers still building up the positions. So for that reason, I actually moved my stop loss back from this blue line to my original location, mostly because the move down on this trade came in multiple pushes. It did not come extremely fast in just one clean leg down. It came in multiple pushes, telling me this was still just normal ranging action, normal accumulation happening on the 15 minutes. So that was my thinking. Now I actually entered another small buy trade, risking less than a quarter of my usual risk, and I did this because I thought maybe this move down is like a very sharp move down that's just going to test this breakout area again and move back up. So once I saw a bit of a hold in this area, that's when I hit the buy again. Now that was a bit of a mistake, because I didn't think there was enough confirmation for that added buy trade. So even though I had confidence in the overall big move up here, because it even happened on higher volume and all of that, as should happen with genuine breakouts, the fact that there was actually consolidation over here, a fair bit of consolidation over here before this crash down happened, and the fact that the buyers did not react extremely sharply, they actually took some time, and my buy up was taken when the reaction up was really not as sharp as it should have been. I think if I were to take a rebound buys up like this, the buys up would have happened maybe on the first or second candle on this time frame. So that was a bit of a misread, but not a major mistake, because the overall thesis was still holding. So for this particular trade, I actually put my stop loss all the way back down to my original stop loss area for this whole thesis of buys going up. And at this point, this is when I realized, hey, I can't really do much more about this now, because this is just big accumulation happening. That's my view. That's my stop where my thesis would be invalidated. So therefore, I can just sit and wait and see how this goes. Because if I ask myself what other earlier point would invalidate my thesis, if there's an answer to that question, then I can start thinking about moving stops. If I'm treating trade management from the perspective of I'm not going to get in and get out, I'm only just going to respect my original thesis and give that a chance, then I did not really see any reason to move stops unless price had actually achieved something positive, and maybe things have changed there. So I just sat on this. I actually moved away from the computer even, and once price came up, I had an alert over here for when price came up. Once price came up here, consolidated a little bit, I was feeling very, very, very good, because this read was working and my new trade management plan was working. Now this bit of consolidation over here, especially after this extended period of buyers building their positions, I just saw this as buyers consolidation. So I left my take profit at the usual area, which I think was decent. But maybe if I could have managed it a little bit more actively, I could have removed this actual take profit order and watched the reaction for the buyers, and maybe gotten a bit more, squeezed a lot more actually. But but I think it's still logical to have my take profit at this area, so I was happy with that. So that was the trade. But both entries ended up in profit, and in the next video I'm going to go over some of in more detail what I was actually thinking about and why I decided to do the trade management this way. And in that thinking, I looked at what evidence do I have for this kind of trade management to work. That I really considered that first before I made this choice to drop my stops back to the original area. So I'll be covering that next. So overall, I think the good thing was my read again was quite good, and this time, unlike yesterday's trades, I actually adopted a trade management approach that gave my read a chance to play out. Okay, so that's all. Thanks, and comments and questions are very much welcome.